Did you know buying a home in a high interest rate market is a great idea? I know, first thought come to your mind when the interest rate is high or is increasing, hit the brake on buying a home. In this video, I will show you 5 reasons why you should consider buying a home when the interest rate is high in the market. So one of the main reason many people are hesitant to become homeowners in this kind of high interest rate market is they are thinking they are paying more. Think about this. If your affordability is $3,000 a month, doesn't matter interest rate is high or low, you can afford $3,000 a month for your mortgage. Yes, you can buy more house when the interest rate is low, but your monthly commitment cannot be changed because that is your maximum affordability. If you decided that is what you can afford, doesn't matter the interest rate, that is what you are going to offer to buy the house. Yes, you will buy more house when the interest rate is low. Now, analyze this way. If interest rate 6%, for $3,200 monthly payment, you may qualify for about $500,000 mortgage. Now, if interest rate is 4%, you may qualify for $600,000 mortgage for the same monthly payment. Now, do the flip side. If you buy a home at the higher interest rate, as example 6%, when the interest rate decreasing, what will happen to that house that you bought for $500,000? It could go up, right? Because so much demand come to the market, so property price will go up. Assuming you pay 6% for $500,000 home and interest rate drop and house price didn't increase, so house price stay the same, $500,000. So fast forward to 5 years. For 5 years, if the interest rate dropped from 6 to 4%, you are paying about $40,000 more to your mortgage as an interest rate because house price didn't change, only interest dropped from 6 to 4. So because of that, you are paying $40,000 more to your mortgage, right? Now, if you understand the market, 5 years is a long time. Now, in that 5 years, property price could go way up. Technically, if you buy the house, what you can afford today, whether you are buying for $500,000 or $600,000, that is what you can buy, and that is what you should buy. Then the interest rate drops, naturally, property price will increase. That's the way historically it happened, and it is a natural thing because demand will rise when the interest rate drop because they are qualifying for a mortgage amount will increase. Another reason is because of the interest rate, most of the buyers are afraid to take decisions. So what happened? Then the demand is low. So in that situation, there are less buyers in the market. So you have a great opportunity. Go and pick a house worth to your money rather than paying unnecessarily in the hot market. So another reason is potentially you may be able to buy a house with less price because there are more sellers than buyers. So sometimes some sellers are desperate to sell, so you may be able to negotiate and buy a house with a great value. That's another reason you should consider to buy a home when the interest rate is high. Now you have to consider this way. Now if you bought the house and interest rate drop, if property price increase, then you can refinance or you can change your mortgage to a better product. That always can be done. If your mortgage terms allow you to change the lender, you can do it. If interest rate drop, you are in a variable rate mortgage, your monthly payment could go down. So that is possible. At the same time, if the property price increase, if you have more equity, you may be able to refinance and get some equity out from the property as well. That's another advantage. I know you will agree. When there are more sellers and less buyers, you have a more bargaining power. That's a great opportunity. When the market is hot, even the crappy house is selling for an unreasonable high price because so much demand in the market always make any house become more valuable. So another point is, so you can build equity faster because you are buying at a low price. So naturally, when interest rate drop, so the house price will increase faster based on the interest rate drop, then you are building more equity. When you are buying a home when the interest rate is high, when less demand is in the market, it's a great opportunity as a home buyer, because you can pick home that you like, you want, which you think is a great value, because you are buying anyway what you can buy. Irrespective of the interest rate, whatever monthly commitment you can have, you are not paying more than that. If you are able to commit $3,000, that is what you are going to buy anyway. Irrespective of the interest rate, your monthly commitment should be whatever you can afford. Even you buy for 6% or 4%, your monthly commitment should not be more than what you are comfortable with. When interest drop, buyers' perception will change, so they are more happy to go and pay higher price for the same house. But when you buy, when the interest rate high, you have the upper hand. You can bargain. You can buy the house that you think it is valuable for your money. Take a decision wisely.